Welcome to Crypto Disrupted. I'm your host, Trent Lipinski. I'm here today with Andre from 1 Minute Economics. So tell us what your background is and then what you're working on.
First of all, thanks a lot for having me on. A lot of people know me from my YouTube channel, from 1 Minute Economics. I like to think of myself as an economist who puts just the right balance between book smarts and street smarts. Because on the one hand, I have the academic credentials, but on the other hand, I'm also an entrepreneur. I'm also an investor in exotic assets like cryptocurrency, of course, but also domain names. Like, for example, I'm pretty sure I'm the only economist who covered things like the short domain mania of 2015 to 2016. And those who know me from my channel or who are going to find out about it now, they're going to realize that I've kind of made a name for myself as this balanced economist who puts forth well-researched opinions and stuff like that. So I'm not your typical, doom and gloomer or someone who thinks that the world's going to end any minute now, and he says that once every month. That's not who I am. And what I try to tell people, and the reason why I'm going to be all over YouTube, all over the podcast scene to promote my book and kind of spread this message across to anyone who cares to listen, I tell them, look, when someone like myself starts worrying, then it's time to at least pay attention. Because for this book, I've had this, I've never really had it in my career before. And I've done lots of stuff, but I've never had this kind of sense of urgency, this urge to tell people, look, these are the warning signals I'm seeing, and this is what I think you should do. So I've decided to write The Age of Anomaly, a book where, just like on YouTube, I keep things simple, I keep things logical. I tell people, look, here's what happened in the past. Let's take a glimpse into human nature, see what makes us tick, see what happened with anomalies of the past. Then let's draw conclusions and hopefully use these conclusions so as to position ourselves properly and hopefully spot the next financial crisis early on. But finally, we need to also have the humility it takes to realize, in my case, for example, okay, I think about these things all day, but even someone like myself can be caught off guard by whichever event triggers the next financial crisis. So it makes sense, I feel, to dedicate just as much time and energy to becoming more financially resilient in general, so as to be able to better withstand everything life throws your way. And here I am, basically. I'm kind of making this big push, with my main intention being that I'm here to tell anyone who cares to give me a minute to plug my channel, who wants to give me a minute of their time, what I'm all about. And at the end of the day, the only thing I want from you guys, from those of you who are listening, if you buy my book, great. If you subscribe to my channel, excellent. But if not, just don't close this. Don't just move on with your life without doing anything. At least, if you guys just take a moment of your time to research the things we're going to be discussing today, then I'm going to consider it a major win, because that's kind of my main goal in life professionally right now, planting ideas in people's minds. And what they do with them is, of course, up to them.
Yeah. And obviously, I've been running this crypto podcast for a while, so I'm on the edge of the forefront of people who are like in the crypto space that are looking at decentralization. They're looking at like all these solutions to all these problems that like probably the average person doesn't realize is a problem yet. And the reason why a lot of these things are problems is because there very likely is an economic crash or crisis of some kind on a global scale coming, and it's coming soon. I'm a little surprised it hasn't happened yet. But we're in the middle of a trade war, the United States and China right now. That's a major issue. From my perspective, this trade war has actually been going on for like 10, 15 years. It's just, we didn't realize what was happening for the 10, 15 years. Bringing all these commodities and bringing all these goods into the United States for a really cheap price that were manufactured in China basically eliminated manufacturing in the United States, for example. So the United States doesn't manufacture anything anymore. So historically, if you go back and like look at the United States during World War II, like the United States was one of the #1 manufacturing countries in the world. They exported all kinds of things. Now, the United States doesn't export anything.
No, you guys export.
We export weapons.
You export debt.
Yeah, weapons.
Yeah, but also that, like after the Second World War, the United States owned 2/3 of the world's gold reserves and was in
Mhm.
fact the main creditor nation of the world. And nowadays, as everyone knows, the US is the main debtor nation of the world. So yeah, there's that, of
Yeah.
course.
Yes, there's that as well. So weapons and debt.
Sounds like a good business model to me. Can't
Maybe.
go wrong.
So, there's definitely a storm coming of some kind, and it's not just the United States, it's not just China. This is potentially a global storm because right now most of the world is being run by central banks, and these central banks are controlling pretty much every country on the planet with the exception of like a couple of them. So, you know, it's a potential there's a potential like you're the economist, why don't you kind of put this into some historical context here and maybe dive into it a little bit deeper.
Yeah, well, first and foremost, I tell people that I'm not spooked by the perspective of the market crashing by 60%. Like, unlike many of my peers, I don't just talk the talk. I also walk the walk. I'm even involved in crypto. I even occasionally trade crypto on leverage. So I'm dead on the inside. It's not like huge volatility spooks. I'm the last person
Yeah.
on this planet who's spooked by huge volatility. What I'm afraid of is something far more serious. You've mentioned central banks. What I am afraid of is a change of narrative, because let's just take a step back and look at the dot-com bubble. That burst, everyone was panicking, but don't worry, the narrative was central banks are here to rescue you. And they quote unquote saved the day, indeed, by lowering interest rates from 6.5% all the way to 1%, which was huge for that period of time. And indeed, it worked, but it worked at a cost. And that cost was that an even bigger bubble was inflated by this easily available cheap money, the real estate bubble. When that popped, at least interest rates got a chance to climb back up, not the 6.5%, but the 5.25%. But when that popped, once again, everyone was panicking. Don't worry, however, the narrative remained intact. Central banks are here to save the day. However, the market demanded a bigger dose of stimulus. So not only did they have to lower interest rates in the US all the way down to zero, and in the European Union and Japan, they even went negative, money had to be pumped into the system directly to the tune of, in the US, 85 billion per month at the height of QE. And in Europe, even more at the height of their QE if you transform it in dollars. But in the US, let's say, we're talking about 1 trillion per year. And to put this into context, from 1913, when the Federal Reserve, your third central bank, appeared, up until the Great Recession, so in almost 100 years, the monetary base had reached 850 billion or so. And they essentially pumped more into the system in 1 year than had existed for almost 100 years. Mm-hmm. Once I start telling people these things, they realize that, okay, it's time to take a step back and at least analyze them. Because once again, it's not a market crash I'm afraid of. We are obviously going to have one. It's the business cycle, nothing special about it, especially us in the crypto world are all too aware of it. But eventually, my main fear is that one exogenous shock like a market crash is going to, of course, lead to the same reaction. Don't worry, central banks are here to save the day. But as of a certain point, the narrative will change and markets will say, no, I no longer have confidence in your ability to save the day. I no longer trust you, and I no longer have confidence in you. This is the main key, because especially in developed countries, people tend to take our systems for granted, and most of them don't realize that the well-functioning of society frequently hangs by a very thin thread, and that thread is, to a significant degree, confidence. The banking system is backed by confidence. I cannot think of one bank that could withstand something like 3 out of 10 depositors asking for their money, because banks run, I have a video about it on 1 Minute Economics as well, banks run on a fractional reserve system. The same way, the monetary system is confidence-based as well. And when that confidence is lost, and that's precisely what I'm afraid of, that's the elephant in the room. I mean, what are we gonna do
I'm in the blockchain.
Yeah, exactly?
I've lost confidence in the central banks. I saw them take my mom's house So she was, during the 2008 crash, she had a countrywide loan, highly illegal.
Oh yeah, Countrywide were huge in the mortgage space.
Yeah, I think she had it analyzed by a lawyer. I think there were like 7 or 8 clauses that were just completely illegal. So typically like 2 or 3 clauses, and they would throw the contract out once everything was said and done. She had like 7 or 8 illegal clauses in her contract.
We had the same thing over here, yeah.
So then Bank of America bought Countrywide. Then Bank of America then created subsidiary companies that then bought out the properties that they foreclosed on. So they foreclosed on my mom's house using an illegal loan, and then sold the property directly to a subsidiary company of Bank of America to purchase the property directly at a discount, even though they refused all cash offers from other people that were trying to buy the house on behalf of my mom. So they basically stole her house. I don't know how else to put it. Like, the banking system stole her property using an illegal loan, then transferred the assets of that illegal loan to another bank, who then sold it to a subsidiary of itself.
Yeah, I mean, it's this level of generalized corruption, basically, that people don't notice when times are good, of course. But when times get bad, that's when they surface. And, just think about traditional banking, the idea that a bank gives you a loan and then that bank establishes a relationship with you, knowing that you're going to have to pay it back for many, many years to come. That narrative has also changed. The bank gives you a loan, then the bank's manager and everyone involved gets bonuses directly proportionate to the amount of loans they're giving out, more so than the quality of those loans and the sustainability of those loans. And speaking of sustainability, don't worry about it. We just give out a bunch of loans and then we sell them on Wall Street. We'll package them as the now infamous mortgage-backed securities, and we'll just ship them off to people. So don't worry about it. Just give people as many loans as possible in the US. Give them, these predatory contracts. You had them in the US, we had them in Romania as well. It was a generalized thing. And then you're surprised that people are losing confidence in the system. Of course they are. And to a significant degree, the adoption of blockchain in general by its core group of supporters had to do with precisely that. The need for an asset class that's decentralized, that nobody can take away from you. And this is what created much of the initial appeal of crypto, and legitimately so. There's definitely room in the market for an asset class like crypto, and I do believe that in the future we're going to be talking about a significantly higher market cap than the one we have today.
Oh yeah, definitely. Because at this point, crypto is the only system that will exist if the central banking system fails. And if people do lose confidence in it, the alternative right now is Bitcoin. The alternative is these cryptocurrencies. So as more and more people get into blockchain and crypto space, there's going to be more and more trust in those systems, as there's less and less trust in centralized banking.
And just as a small parenthesis, people talk about use cases. Oh, crypto doesn't have enough use cases. Guys, as someone who lives in Romania and who grew up in, a less developed country, let's say, I'm going to give you a quick example. Let's assume you're an engineer married to a doctor in Syria. You have a home, you have a car, and you decide to buy a Bitcoin at 20,000 at the worst possible time in December. Stuff goes wrong and you're forced to flee the country. So what happens to your wealth? Well, your real estate, the value of your real estate essentially goes to zero because you have to leave it behind. The same way, you're probably not going to be able to take your car with you either. Whereas when it comes to crypto, even if you sell it at 3 times lower than what you bought it for, that Bitcoin, for example, that you bought at 20,000 might be enough to get you a new start in life in another country. And people take these things for granted, but it's just ridiculous how awesome this freedom can be. And again, this is coming from someone who tried to do business in Romania many years ago. Right now, of course, we have PayPal in Romania. We have lots of options. We're in the European Union and whatnot. But when we weren't, nobody wanted to have anything to do with us. So essentially, you found yourself in the position like someone like myself from Romania. You had certain skills, designing websites or whatever it is you knew how to do, but there was no way for people to pay you because PayPal said, nope, no thanks. So just just this, the idea that you have Bitcoin, that the CEO of Bitcoin doesn't care about you because there's no CEO of Bitcoin. Bitcoin cannot close your account. Bitcoin cannot ban you. Bitcoin cannot say, for your protection, we are limiting access to your funds. Bitcoin is not going to do that. And of course, there are drawbacks. It's on you to keep your crypto safe. It's on you to do your due diligence before investing in something or whatever. But, the blockchain isn't here to solve all of your problems. It's just here to give you legitimate options that I, for example, many of them, I didn't have them.
Mm-hmm. Well, and that's the thing is even so under Obama during his tenure as president, the restrictions that they placed on the banking system in the United States are crazy. They've literally built class directly into the banking system now. So if you go to your average bank, your Wells Fargo, your Chase, or your Bank of America, and you open up a bank account and you put less than a certain amount of money in, you're restricted into how much money you can send and move in and out of that account. You literally have to hold a balance of a certain amount of money. In some cases, it's between $10,000 and $25,000 to be able to get the next class of account. So then, if you get into that next class of account, I think some of them you might even have to hold up to 50,000. Then you get in. Then now you have the ability to transfer a little bit more every month, and you have slightly better interest rates and certain things that they give to these higher class accounts. And then there's even a class above that when you're holding millions of dollars. And then you start to get into accredited investor territory, which accredited investors basically, in the United States, they're literally a different class of people in the banking system, in the investment system. They have the ability to invest in startups. They have the ability.
Yeah, you need to be an accredited investor over there to have access to certain assets.
And not only to have access to certain assets, to have access to certain systems within the financial industry, the ability to invest in hedge funds, the ability to have your money professionally managed. You basically have to be an accredited investor to have your money professionally managed. So, and then they call the normal people retail investors. So if you're not an accredited investor, you're a retail investor. And most people don't even know that, accredited investors have a name for everyone who isn't an accredited investor. Because the average person never gets to experience being an accredited investor. They don't have access to that part of the financial system. Many people don't even know it exists.
Yeah, there's so much frustration with the financial system. The United States is, of course, a special case for this reason. For example, if you go to many different countries as an American citizen and you try to open a bank account, well, good luck with that. They're not going to have you. And of course, these things basically inhibit your freedom, And there's a strong, of course, a lot of people say, oh, okay, it doesn't affect me that much. It does. It does. Because, again, of course, I'm talking from my own experience, just being allowed to make, even if you make your own mistakes, you're allowed to do so. It allows you to grow. And crypto is, to a decent enough degree, fueled by this frustration of people who want more freedom. They don't want this entity to babysit them. They want to go decentralized. And of course, it won't be easy. Of course, there are risks involved, but let people make those decisions. Of course, you choose what to invest in, you choose which wallet to use, you choose which exchanges to use, and so on. It's on you. But the same way, you do have this awesome freedom associated with crypto that, again, when it comes to use cases, there are plenty. You don't need each and every story on this planet to use crypto for you to say that, the use cases are decent enough. There are a gazillion use cases I could think of right now, and they aren't just stuff that, some developers put
on this show. That's what I'm doing.
Yeah, it's not just things that people put on a piece of paper. They're life-changing things for someone, let's not even talk about Romania. Let's talk about, Pakistan, Iran. It's not your fault that you were born there. And just having access to, the global marketplace by being allowed to actually do business in one way or another, it's huge. It's amazing,
So what at this point are you seeing do you have a prediction for like timeline for what's potentially about to happen, or what are some of the triggers? What are some of the things that you're seeing right now that, you know, have got you worried about the existing central banks and the existing banking system?
Well, I don't think it's really important ultimately what triggers it, as much as it's important to be prepared for when that happens. Because I do see, I've identified plenty of pockets of anomaly, as I choose to call it. For example, one, the fact that our system is incredibly hooked on cheap money. And that's a huge problem. In my initial example on the show, I've mentioned that at least after the dot-com bubble, interest rates had gotten a chance to climb back up to 5.25%. Look at interest rates now in the US. Look at them in Europe and Japan, where they're even worse. And here we are, many years after the previous crash. Only once has it happened that more time passed between recessions than right now. And if another year passes, it's going to be a record. So, one, you have the fact that we're hooked on this economic cocaine, if you want to call it that. Two, there's the fact that, cyclically speaking, we're kind of due or overdue, if you will, a financial crisis. Then there are the geopolitical aspects as well that you rightfully pointed out, like the largest trade war in the history of mankind, that between the United States and China. So there are just, you know, so many pockets of anomaly out there that any one of them could trigger a crash. And it's why I tell people, have the humility it takes to realize that the name of the game isn't necessarily grabbing your crystal ball and predicting with amazing accuracy exactly what's going to happen, when it's going to happen. No, I would much rather prepare a year or 2 years too early than a week too late, you know. And that's kind of the idea that I'm pushing with the Age of Anomaly. Like, I tell you how you can do something meaningfully important with the financial dimension of your life in a way that doesn't take over your existence. I'm not asking people, okay, from now on, you're only going to think about economics. From now on, you're only going to, you know, follow financial related platforms. No, I'm going to help them to adjust, you know, the dosage and make it so that they increase their likelihood of landing on their feet, no matter what it is life or the economic system in particular throws at them, and they can do so without it taking over their lives. I think it's a fair proposition.
So give me, you know, give me a taste of what some of these resilience tactics and what something that people can do to try to protect, you know, their wealth and ride out whatever's about to happen next.
First of all, and this is why I dedicate a huge chapter in the Age of Anomaly to that. Please take a glimpse at economic history. It may sound cliche, but I tell this to people, you don't read up on history so that you know exactly what's going to happen. You read up on history because it gives you a glimpse into who we are. It gives you a glimpse into human nature. Like in my book, I have stuff from the tulip mania, the first recorded asset bubble, which peaked in 1636 to 1637, so a long time ago. From that all the way to modern day events like the dot-com bubble, the Great Recession, the short domain mania, you name it. And you're going to find common denominators. You're going to draw conclusions, but most importantly, you're going to learn a bit more about what makes us humans tick. And that right there is going to make you multiple orders of magnitude more resilient than the average person. So there's that. 1. 2, work on your personalized portfolio strategy in a way that makes it possible for you to internalize exactly what you want to invest in and why. Don't do it when everyone's panicking. Do it now. Like, take a long walk, do whatever it is that clears your mind. And for someone in your specific situation, don't ask me to come up with, you know, a one-size-fits-all solution, because if you live in Egypt or a politically unstable country that's only a regime change away from you losing your real estate, I won't be so willing to recommend real estate. Yep. So it's on you ultimately, and I help you do this in the book, to say, look, I want exposure to this asset class. Why? For this reason, for that reason, for that reason. Then I want exposure to this asset class as well. Why? For this reason, for that reason. And you need to internalize these things. You need to have them deeply ingrained in your subconscious, because ultimately that kind of clarity is going to enable you to eventually have exposure to all of those assets. Don't make it a goal to have exposure to them right away. No, instead, by knowing exactly what you want to invest in and why, You're going to be able to, as Warren Buffett points out, be greedy when everyone else is fearful and fearful when everyone else is greedy. So, for example, if the stock market is going to crash by 60%, while everyone else is, panicking and bottom selling, you're going to be, hey, wait a second. I've made it a goal to have exposure to this company, to this company, to this company. Why? Because that, I have clear reasons in mind. I know exactly why. So this is actually a decent buying opportunity for me. And you're going to do the same thing across all asset classes. And eventually, you're going to have exposure to them. It's not rocket science, but practically nobody does it. When it comes to the average person, practically nobody does it. So,
well, they trust the banking system.
of course, like these assets are, it's not that difficult to come up with something that, with a strategy where you have exposure to assets that complement one another nicely. And it's not rocket science, okay, you have your
It's
precious.
so much easier with crypto now because
it's ridiculously easy, and crypto should be a part of it. Now, should your strategy revolve exclusively around crypto? No,
probably not.
Of course not. But it should be a part of it. And if you're not taking crypto seriously, if you're not, then you're doing it wrong. And there's that dimension. There's also the idea of working on the psychological elements. This is especially valid, and I think people who are in crypto are going to be able to put the psychological advice I provide to good use when perhaps trading crypto or investing in crypto as well. How do you cope with, for example, scenarios in which you lose a lot of money? How do what is your reaction? That's frequently what makes or breaks traders or investors even. Generally speaking, smart people who, are perfectly capable of making rational decisions, but then something happens, bam, they lost a lot of money and they cannot deal with it. So that's why I like to think of myself as a hands-on economist, because I don't just put, I'm not just the type of person who reads a bunch of books and then regurgitates the stuff you read. I'm someone who actively, when I talk about crypto, you can be certain, like I have a leveraged trade on BitMEX on right now. I invest in crypto, I trade crypto. The same is valid when it comes to the other assets I'm referring to.
Mm.
And in the end, this is what I do. I keep things logical. I keep things simple. And ultimately, it's not my goal to make people panic, because even if you panic, it's not going to do you much good. Instead, I want to basically arm my readers with the knowledge it takes for them to say, look, I know we're walking on very, very thin ice. I know that eventually something's going to break. I know that no matter how hard I prepare, it's still going to be hard. But I have this knowledge. I know what happened in the past. I know what makes us humans tick. I have this strategy for myself in place. So, I'm doing my best. That's basically what the Age of Anomaly is all about, enabling you to do your best. Like, can I guarantee that you're going to be all right no matter what? No, but I can promise that you're going to be multiple orders of magnitude in better shape than the overwhelming majority of people.
Yeah. Well, and just knowing that in the event that there is some kind of crisis or something happens, just having a plan prevents you from panicking. And knowing that, okay, this is what I'm going to go do now. Because in many cases, if there is some kind of major failure with the central banks, or, the US dollar collapse or the euro collapses or another currency collapses, or any of these events, whatever potentially could happen, there's going to be a real world backlash to that. I mean, I'm in San Francisco. The wealth inequality that I am seeing here in this city is unlike anything I've experienced before. I've traveled the world. I've been to a lot of different countries. I've seen third world countries. I've experienced what that looks like. And now here I am in San Francisco, and I'm seeing both this like amazing amount of wealth that's been pushed to this like very small elite. And then I'm seeing homeless kids, people that are 18 years old on the street, completely homeless. I mean, there's drug addicts, there's some major serious mental health issues, and it's happening on the streets of San Francisco today. So I'm already seeing, to me, that's already kind of a warning sign of what's to come, because traditionally San Francisco, one of the reasons why this has been such a hot spot, it's because basically you've got, about 1 million people within like a 7-mile radius. And so if you can scale an idea within the 7 mile radius to 1 million people, then that usually means that you can, eventually scale to 10 or 100 million. So that's why startups, that's why technology companies have kind of used the Bay Area as a marketing testing ground. Well, unfortunately, when I look at the housing crisis here and I look at what's happening with the wealth inequality issues here, this is the future for the rest of America. This is the future for what's going to happen in other major cities where wealth inequality gets so extreme that you're going to have this elite class and you're going to have everyone else, because that's how it already is in the Bay Area right now. The middle class is gone. It's been abolished. There is no more middle class.
There is no middle class. I mean, think about it since we're on the topic. Like there are many studies, like one that I recall in 2015 published by Bankrate, which showed that the average American household would have extreme difficulties reacting to even something like an unexpected $500 or $1,000 expense. Yep. And we're talking about the United States. We're talking about the world's #1 superpower. We're talking about this in the context of, present day situations where, for better or worse, systems are at least kind of sort of functioning. And the narrative is that there's all this prosperity. So just ask yourself, if right now, when nobody's panicking, the average family, even in a country like the United States, is still living paycheck to paycheck pretty much, just what is likely to happen when eventually something breaks? And as someone who lives in Romania, as someone especially, things are in decent shape over here right now compared to how they were, but as someone who grew up in Romania, when times were a lot tougher, I've been exposed to the fact that systems don't already work. Like, it was part of my education by my grandparents, even my great-grandparents, who always, had a bit of water nearby, always had, something like candles around the house because they knew there were power outages. So I do believe my education helped me kind of understand that systems are prone to failure. They won't always function properly. And I get goosebumps. I honestly get goosebumps every time I think about the United States and countries like the United States, and I see how dependent people have become on those systems. And I don't want to think about what's going to happen next. I mean, this is maybe why I have such a deep sense of responsibility to spread the word about my book as much as possible. And, tell anyone who cares to listen, look, I'm concerned about this. You should think about this. Again, I am doing my best, but no matter how, most people are going to end up on the losing end of it. It's going to be one of the biggest wealth transfers, I feel, in the history of mankind, and the average person is unfortunately going to be on the losing end, most likely.
Yeah, and unfortunately, some of this has already happened. I mean, I'm pretty much a millennial. I'm 31, about to be 32, and the millennial generation, as far as I can tell, is not doing well. I've got a few friends who, have inherited some money, or who were born into wealth. And they're the only ones that I know who currently own property or have major investments. Everyone else, no one has won the lottery. No one has, even the ones who have successful careers, who make a lot of money, are still struggling. So
yeah, I mean, look, all of this cheap money, all of these anomalies, at the end of the day, if you draw the line, you see that they have essentially zombified the economy at the expense of the average person. Because of course, if you're someone who has exposure to real estate, if you're a real estate investor, then you're very happy if the market is going up. However, if you're a young person, then all of a sudden the barrier to entry is extremely high if you want to own your own property. The same way, everything about our current system that needs perpetual growth, that needs perpetual debt-based growth, is just so ridiculously unsustainable. Oh, you finished high school, time to go to college. Oh, don't worry about it. You're going to rack up a few tens of thousands of dollars in debt, but you'll figure it out.
For some people.
Or yeah, depending on what you're majoring in, even more. Or, you want a place to live? Yeah, sure, don't worry, but many generations from now on are going to be indebted if you want to buy this property. And it's this situation that creates a major discrepancy, because okay, the markets have gone up. Let's leave real estate aside. The markets have gone up. How many people who are millennials, I'm also a millennial, how many people who are millennials do you know who have a robust stock market portfolio and were able to take advantage of these gains? Yeah,
Very
exactly. Slim pickings, probably, yeah.
Yeah.
And essentially, this is what's happening. You might think that after all of this money was pumped into the system, after all of these unprecedented things have been done, after the system has been given what many consider to be economic cocaine, as far as the average person is concerned, the benefits lie elsewhere. And the average person is in pretty bad shape, even in our context, even now.
And there was at least in the tech industry, what I've seen is there's been a major consolidation of power. So for example, so the tech industry is actually a perfect example of what you were talking about, how basically, they printed a bunch of money. And so when Obama came into power, he literally just handed money to the venture capital firms. These were, venture capital, for many of these are the established venture capital firms. Well, they took major losses when the economy crashed. So they got TARP funds. They got access to the printed money that Obama printed when he came into power. These were the people who helped get him into office. And then that money basically set off this whole startup boom that we've seen over the last 10 years. So since the 2008 crash, you've seen San Francisco, kind of reboot itself. And we've seen this whole, boom of the tech industry again. But instead of it creating all these startups that went and, solved all these problems for the world, all of that wealth just accumulated into Apple, Google, Facebook, Netflix. All these major corporations emerged out of it, and they just bought everything else up. So now we've got this completely consolidated tech industry where you basically, as an entrepreneur, you cannot create the next Apple. You can't create the next Facebook anymore because the barrier to entry is so high. The amount of money, the amount of resources, the amount of computing power that you need to even compete with these centralized solutions is insane. So you can't even, your goal as an entrepreneur now, and this is even my personal experience, is now you build startups to sell them to a bigger company. That's your goal now. That's how you have to make money now. Like there's not, those opportunities to be able to create the next big thing don't exist anymore. Now you create the next big thing so that you can sell it to Apple or Facebook so that they can then market it properly and put their resources behind it. And that's entrepreneurship now. Like that's the goal. Like to get an exit is now your goal. You've got to build a startup. You've got to sell it. And that's the only way to possibly get a chunk of money these days. Most CEOs, I know when I was CEO, I didn't pay myself very well when I was running a startup. You don't get paid well to be in charge necessarily. So, there's a lot of downfalls with the way that the banking system and the way that inflation and all of these things over the last 10 years have transpired since the last crash to basically create a system where you can't crawl out of it. You're at the bottom of the hole and like maybe you can get to the top of the pile, but you're still in a hole.
Yeah, I mean, I can confirm, even just random example, when I ran 3 hosting businesses, where was the money? The money was in the exit. The exit was much more pleasant than running the hosting businesses and working working like a maniac all day for really not that much money and getting hacked by everyone and all that fun stuff. So yeah, you're right. And that's, in a nutshell, one of the main problems we're facing, the fact that the unsustainable has become the status quo.
Mm-hmm.
And yeah, good luck with that.
Yeah, it's a fixed system. You can't, like I said, you can't get to that next level. And even once you get that exit, it's like, okay, now you've got to reinvest that money to start the next thing to try to get that next exit. And it's just this perpetual, you're just on this, you're a mouse on the wheel. You're just running in a circle and you're not going anywhere. So it's, they've set up economic conditions where you just can't win, even when you win. And that, unfortunately, it's on, as you said, it's unsustainable. So that's where crypto, that's where blockchain, that's where decentralization has the potential to change that. But the problem is you have to change how you think about things. It's a completely different way of thinking, because you're now, you can't just rely on these centralized methods and these centralized systems to be able to continue to go down the path. You have to completely reinvent how organizations function. You need to reinvent how the technology itself functions. You've got to learn, what governance is and how consensus systems work, and dive deep into smart contracts. I mean, there's layers and layers of complexity right now trying to get involved in this decentralization movement. But as time goes on, it's going to be easier and easier and easier, to the point where this is going to be off the shelf software. You're going to be able to just go download code that can help you organize your organization. You're going to be able to go download open source projects. You're going to be able to pay for something as a service to be able to help solve a problem. You're going to be able to leverage all of these different solutions to be able to create and be a part of networks and communities again that are not beholden to one major corporation or one major bank or one major system that does risk failure.
Yeah, I mean, it's just incredible. Of course, there's a lot of room to grow when it comes to user friendliness and so on. But I tell people, hey, just remember that during the previous bull run, the one that ended in 2013, the largest exchange by far was Mt. Gox, which used to be a Magic the Gathering trading platform.
Yeah.
And right now, I work with approximately 17 exchanges, mostly because I don't trust any of them with a lot of money, so I only keep small amounts in each one. But I have this option. I have plenty of options. Right now, there are amazing solutions if you want to be in this space. And of course, it's not perfect. I'm sure 5 years down the road, we're going to look back kind of like we're looking back at Mt. Gox now. But there is this tremendous growth. And I'm really happy to see the fact that give people options, and you're going to be surprised as to how they take it from there. That's all. It's ridiculous how many problems can be solved if you just give people options. And for this reason, I stress to people, especially younger individuals, people who are at least tech savvy enough to be able to properly use a smartphone. You owe it to yourself to at least study these things in a bit more detail. You don't want to be that guy who was there for everything but didn't do anything, and just for the sake of not embarrassing your grandkids, just take a few minutes to learn about these things now.
Yeah.
These are opportunities that my parents didn't have, that are unique to our generation, and we're here. Of course, there are inherent problems with that. I'm also involved in the domain investing industry, and of course, if you were there back in the 90s, you could have bought domains like money.com for $100. And people say, oh, those guys got lucky. They didn't get lucky. What they don't realize is that in the 90s, spending your hard-earned money on something as silly as a domain, as it was perceived back then, would have made you look silly in front of your friends, your family members. You got ridiculed for doing it. And yes, those people who did it, who kept their domains until the market caught on with them, they did very, very well, and they had, life-altering results. The same way when it comes to crypto, of course. How many people have lost crypto? How many exchanges have had difficulties with hackers and whatnot? There are inherent problems, of course. There always will be. But it's a huge privilege to be here. Like, I, for one, am very happy to deal with Wild West type problems because I know I have access to Wild West type returns, and I'm more than happy with that.
Awesome. Do you have any final thoughts before we wrap up?
Well, people who want to get in touch with me can head over to youtube.com/1 Minute Economics. And as far as my book is concerned, again, I can think of a gazillion better ways to make money than writing books. And I'm not in it for the money. If you buy it this week when the episode is going to air, it's going to be available for just 99 cents. It's 400 plus pages. It's practically free. You can find it on Amazon, on Barnes & Noble, iBooks, which is Apple's app, and Kobo, or you can just find all the links on ageofanomaly.com. So that's one. If you think it's interesting enough to at least warrant your attention, I would recommend getting it this week since it's just practically $1. And two, To kind of celebrate the launch and incentivize people to spread the word about my book, I have a huge contest actually going on 1 Minute Economics. It's going to be live at the time of this recording. The number one prize is 1 Bitcoin. The number two prize is 1 Ether and 1 Litecoin. I also have 8 hardware wallets as prizes. I have Amazon gift cards. So just a ton of prizes that people can put to good use. And basically, I reward them for doing various tasks which help me spread the word about my book, which in the end is what I'm here to do. So yeah, that's pretty much it. If you think the book is interesting, if you think it's worth your attention, I'd recommend getting it until Sunday, and you might want to check out the contest as well. But at the end of the day, my only request to you guys is this: even if you don't buy the book, even if you don't check out my channel, at least don't close this browser tab or however it is you're listening to us. Don't just move on with your day without doing anything. At least spend a bit of time researching the things we've discussed. At least give some meaningful attention to the stuff we've been talking about on the show. And I promise you that if you do that, you're going to be grateful down the road, and I'll consider it a major victory, personally.
Awesome. Well, thank you for coming on the show. This has been a fascinating talk, and yeah, definitely need to go through the book a bit more. And thank you for coming on.
Thank you guys for listening, and thanks for having me. Take care.